stricter tariffs on Chinese imports and a crackdown on Chinese foreign investment in the U.S. are being considered by the Trump administration, according to a Bloomberg report. The proposed moves are in retaliation for the alleged theft of U.S. intellectual property, following an investigation by the U.S. Trade Representative's office last year. By law, the U.S. can impose trade restrictions on any country which has been shown to undermine American businesses. An announcement is expected in the coming weeks, and any move by the U.S. would serve to further inflame trade tensions which have flared up between the two nations in recent weeks. In a more extreme scenario being considered, the U.S. could impose an import tax on a range of Chinese goods, from clothing to electronics. The Bloomberg report said a slightly watered-down version of the proposal would instead specifically target Chinese foreign investment in the U.S. Lobbyists for U.S. companies that are heavily reliant on Chinese trade have urged the Trump administration to negotiate further with Beijing before imposing any penalties. In conjunction with White House Economic Council Chief Gary Cohn's resignation this morning, markets have taken a decidedly risk-off tone at the open of Asian trade. The Australian dollar has slipped below US 78 cents and the ASX 200 is more than 0.7% lower, ahead of Q4 2017 GDP data at 11:30 a.m. AEDT. Daily FX senior strategist Ilya Spivak told Business Insider that increasing trade tension will drive increased demand for safe-haven assets. This morning's development seems to suggest the markets were too optimistic in dismissing the appetite for protectionism at the White House, Spivak said. If these moves gain traction and become policy, the most likely beneficiary is likely to be the Japanese yen, which tends to gain when market sentiment broadly sours. The near-term implications for the U.S. dollar are less clear, but sweeping risk aversion has tended to be supportive as capital flows seek liquidity havens. The U.S. Trade Representative's office has previously argued that Chinese companies often force their U.S. counterparts to disclose trade secrets, as part of the cost of doing business in China. Among the specific industries under threat, U.S. policymakers that China is trying to build up its capacity for the production of semiconductors to compete with the U.S. U.S. officials are still considering what action to take, and may still end up doing nothing, while China has recently warned that any tariffs could harm the global trading system. Stock markets in Hong Kong and mainland China will open at 12:30 p.m. AEDT.